Welcome to our Oz Trader Chat. Today is the 7th of June, and as always we need to start our proceedings by going through our legally obliged disclaimers. The first disclaimer tells us that all trading involves risk. Please be aware of and accept this risk before trading, and never trade with money that you cannot afford to lose. Secondly, you should know that past performance of any trading methodology is no guarantee of future results, and no representation is being made that any account will achieve profits or losses similar to those discussed. Finally, all results should be considered to be hypothetical unless otherwise specified. Hypothetical performance results have many inherent limitations and, unlike an actual performance record, do not represent actual trading. Before we move away from the disclaimers, I should emphasize their importance, particularly at the present moment in the market. I am speaking a lot about potentially entering trades, and you must be aware that I am not licensed to provide financial advice, and I'm not providing financial advice in these trader chats. I'm purely presenting my opinion. I'm not making recommendations. So those disclaimers are very important, so please bear them in mind. Right, a few points about using NetViewer, particularly for those of you who are new. The best way, of course, is to best way of asking questions is to type a message into the chat window. If you cannot hear me, I managed to find that image again. If you cannot hear me, slide your speaker slider up to the right, and if you'd like to speak to me, right-click and enter a chat message. And be careful of mouse clicks because your name pops up, and it's very useful if you're trying to point something out. Not so useful if you're not. Okay, well, let's get down to business and start taking a look at the markets. As always, if you have any questions, please put them into the chat window. I'm planning to bang on for about 45 minutes about cycles and the market generally, and I hope you'll find it interesting. If you have anything specific that you would like to ask, then please do pop any questions that you have into the chat window. And as always, any level of question is perfectly fine with me. If you have a complete beginner question, you don't know anything about Hurst cyclic principles, I'm very happy to explain the real basics. Today's discussion might get just a little complicated because there's some fairly complex things happening in the Australian market, which I will be speaking about. So if things get a little complicated, just put a message in the chat window saying I have no idea what you're talking about, and I will take a step back and try to explain myself more clearly. Okay, so I think many of you that I see in the list of people here today were also with us yesterday, and as you will know, I believe there is a chance that the US markets are in the process of forming their 40-week cycle trough right now. We've been talking about an analysis in the Australian markets for the past several weeks, a month or two, which differs from what's been happening in the American markets. Now, last week I started going back to have a look at some of the alternate analyses, because whenever you have an analysis for your market, and I speak as a South African, I spent many years trading in South Africa. I traded both the American markets, I day traded futures on the US futures, which was an experience, I can tell you, from South Africa. And I also, of course, traded the South African market. And I see Alain. Hello, Alain. I learned when I was trading the South African market that when I have an analysis for the South African market that differs markedly from the US markets, one has to keep making comparisons. One has to keep going back and forth. I do think it's very important. And last week we did that a little bit, although we ran out of time, so I didn't have time to run through all the options. But I think particularly at the moment, that is something that one needs to be doing very much in the Australian market. So let's see, where shall we start? I've got 3 charts that I'm going to be showing you this week, and I must get to all of them because I think they're all fairly important. let's see, where was the favorite analysis that we have been monitoring? Here we go. Okay, this chart here is the analysis that we have been monitoring fairly closely over the past several weeks. However, this week something happened, and I need to explain that to you. I'm not going to start again from the big picture, because I think most of you have been with us, and I don't want to get boring about this. You know that the big picture for me with these analyses has to do with the 4.5-year cycle forming a trough in 2009. We have spent lots of time talking about the positioning of this 18-month trough. Let me just turn on my whiteboard. There we go. Positioning this 18-month trough here in the 4th of October, as opposed to the position in the second week of August. We've discussed that before in previous trader chats, so I'm not going to repeat myself. I'm not going to go through all that again. You know that this remains my favorite analysis. We'll have a look at a possible alternate which does position the 18-month trough back here in August in a moment. But for a while this has been the favorite analysis, and here we go. Let me just point out one or two other things about it so that we're all on the same page. 18-month cycle trough, 4th of October. Very importantly, the positioning of the 20-week cycle trough. Most of you know that the 20-week cycle trough, I believe with some conviction, should in fact be placed on the 30th of January for the US markets. And yet I'm sticking to my guns and positioning the 20-week cycle trough in March for the Australian market. And the reason for that, and I will take a look at another analysis which positions that cycle trough differently, but the reason for that is that the cycle shapes work better. It just looks better visually. Positioning the trough on the 30th of January in the US markets does not result in very many inverted cycles. It doesn't result in too many poorly shaped cycles. However, doing so for the Australian market does, and it has further implications. So I prefer to place the 20-week cycle trough here in March, and let's see what else we can say about this analysis. Now, when we were looking at the analysis last week, the 40-day cycle trough, and I would have to actually go back and confirm this, but the 40-day cycle trough was positioned over here on the 9th of April. Okay, and you will notice that something has happened this week. Okay, for those of you who are working with Sentient Trader and who are analyzing the Australian Stock Exchange, the ASX index, you would have noticed the analysis starting to shift at some point during the of last week, or it might even have happened on Monday. And it's very important to understand why the analysis shifted, and some questions that it threw up in the air. They're very, very important, and so it's going to give us something useful to speak about today. Let me turn that off, and let's start doing some measuring. Last week, when we were looking at this analysis, the 40-day cycle trough was positioned over here in early April, as I've just explained, which made that cycle trough 35 days. Okay, now let's zoom in a little bit and have a look at what has happened as the cycles have unfolded. I talk about cycles unfolding because that's what happens, in my opinion, in the markets. So last week we had the 40-day cycle trough over here. Okay, so instead of placing it over there, it was placed over there in the second week of April. Okay, and according to last week's analysis, when we spoke last week, we were talking about the formation of an 80-day cycle. All right. I think most of you will remember. For those of you who don't, I'll explain it. In the American markets, we were looking at an analysis where the markets were pretty much heading down in the final 5-week cycle down into the 40-week cycle trough. The Australian analysis differed because the trough that the cycles were heading down into was likely to be an 80-day cycle trough. Okay, that was the big difference between the two analyses. So Australian market, we were looking at approaching an 80-day cycle trough. American market, we were looking at approaching a much shorter trough on the way down to the 40-day cycle trough. Now, what has happened in the last week, and why has this analysis changed, and why has this 40-day cycle been moved over? Well, what happened is that from this 40-day cycle trough over here in the second week of April, the market, to form its 80-day cycle trough, needed to form that within a limited number of days. Okay, and the average length of a 40-day cycle is in fact 34 days. If that surprises you, I'm not going to repeat it now. I think most of you understand why a 40-day cycle has an average length of 34 days. Okay, now Sentient Trader will allow a cycle to actually extend to 150% of its average length, which means that the longest length that a 40-day cycle can be is 51 days. Okay, so the longest length of a 40-day cycle is 51 days. All right. Now, you will know that last week we were speaking about the placement of this 80-day cycle trough, and so let me just clear this and let's start doing some measuring again. From the position of the 40-day cycle over here, okay, the 51-day limit for where that 80-day cycle trough that we were expecting and were speaking about last week, the 51-day limit was on Friday. Okay, so in other words, that 40-day cycle, which had a synchronous 80-day cycle trough with it, okay, so it was an 80-day cycle, that had to have occurred by at least Friday, all right, within 51 days. Now, what happened on Monday when the markets dropped lower? Okay, when the markets dropped lower, the options for placing that 40-day cycle became limited, and let me show you. On Friday, it was still possible to consider a 40-day cycle trough over here, with another cycle trough perhaps having formed at either one of these troughs over here. And you will remember that last week I spoke about those three potential troughs as being troughs of the 80-day cycle. Okay, that's what we were considering. When the market fell on Monday, as it did, okay, there became a fourth option for the placement of that 80-day cycle trough. However, because the distance from that cycle to that cycle was in fact 54 days, that breaks the rule of the minimum 40-day cycle length. Okay, it's too long for a 40-day cycle. So what does that mean? That means that one of these troughs that we spoke about last week had to be the trough of the 40-day cycle. Okay, so your analyses would have started changing, and what might have happened, let me just draw it here, is that the 40-day cycle remained over here, and the 80-day cycle would have been pinned over here. Okay, so there's your 80-day cycle. So you would have been having a look at an analysis that looked a